Hello everyone, welcome to another weekly market review. It is the 10th of May 2021. May has historically been an absolutely fantastic month for cryptocurrencies, both altcoins and bitcoins, and the market is currently proving that. Let's have a look at what's going on. Total market cap on the weekly time frame, we got a bullish engulfing last week. In the week before, we have confirmed it as continuation. On the 4-hour, let's just quickly look at the RSI, and you can see that we were making quite a few divergences, and price has just kind of broken up from there. So the 4-hour as well, negating any kind of divergences. You can see the lows from the 26th of April. The anchored VWAP was getting tested, but last night not even able to do that. So market, I would say, is in a very strong part of its impulsive cycle. In terms of structure, also you can see that we had this potential rising wedge, broke up, fake breakout, and after that we have a breakout and a retest and an impulse from that. So structurally, in every kind of way, it's just a very bullish market. Altcoin market cap as well, stronger than the total market cap, of course. And in terms of what we've done with the impulse that we got from the 26th lows, really moved strong out of there. We've made a week-long consolidation. Essentially, I would say since the 3rd, it was a bit of a grind, but price has now broken up, and you can see that if this is a ramp and we've just tested it and impulsed out of it, we can expect an even stronger move and a further continuation for this market. Even on lower time frames, you can clearly see we built a structure and currently we are breaking up from it. So in terms of structure, in terms of price, again, very, very bullish. For BTC as well, even though it's been a slow grind, we had that bullish engulfing weekly, and last week we've confirmed that with a continuation. Even if it is not so strong, it is still a continuation and a confirmation for this engulfing candle. Apart from that, the weekly point of control is moving up. The value range in the weekly and the daily time frames is all moving up. It's looking like a slow grind, but the base of the market is slowly moving up and supporting what price is doing. Currently we are at a very significant resistance level, and I would say once this is flipped into support, this 59,300 to 60k, once this is flipped into support, we can start looking for another potential move up to the 63, 64k zone. In terms of downside, if you do get a retrace, I think this 51k is a very significant and a great level for price to find support if we do end up coming down here. But for now, this gradually, it is, even though it's a slow grind, it is reflecting strength, and it's reflecting that the market is supporting this slow grind up. Here's large caps against BTC. We've had a very powerful impulse, guys, all the way since early March. It's about 150% for large caps against Bitcoin. It's a really big deal. It's very obviously alt season, as clean and as clear as it gets. In terms of levels, I think we're 10% away from a very significant level. Look at this support, big support, resistance, fake breakout, tested it as resistance again, and strong move down. So this is very powerful level, and it's just about 10% away. In terms of timing the market, I'd be very interested. Once price does get here, I think BTC makes an impulse, in one direction or the other. But this would be, I think, a very good place for BTC to get impulsive and for large caps to kind of correct this very, very big move that they have gotten across the board. In terms of levels, Ethereum as well, again, now at the quarterly level, but also very close, about just another 10 to 15% away from a big resistance level. So very interesting to see what price does once we do end up breaking this, and if the relation between Ethereum and Bitcoin remains to be cyclical, or something new has to happen in this market, because it is going to be Ethereum that is going to be defining the altcoin dominance. So again, across the board, after very, very strong moves, Ethereum has had an absolutely amazing 10 days against Bitcoin, reaching a significant level and a point of interest. In terms of dominance, is the altcoin dominance, and you can see it's a big weekly level. We closed the weekly above it, so this still shows that there is still some more room for this to move. And here we have more confluence. Here's another 10% up to the next significant resistance, and this is June 2017 top, guys, for the altcoin dominance. So I would say don't get over euphoric. There is, this was a significant level. We've closed a weekly above it, but just take this level to level, guys. I know we've been on a great uptrend, and Ethereum is on a tear against Bitcoin, but just don't get irrational. Levels are levels, no matter what kind of market you're in. If we start to flip this into support, then play this from the other side, but this is going to give a reaction, whether you like it or not, or whatever your narrative is. Another 10% higher odds against BTC can potentially give a reaction, so just watch out for that. We're looking at the dollar, and we're pretty close to breaking down this strong impulse. We're catching this right up here, guys. We'll see a lot of people following in the wrong places. This is where we were looking at the breakdown of the dollar. We were alerted. Even on Twitter, we looked at the commodity charts and we were looking for that potential reversal. So that was the actual place to be getting in. Now what I would say is that if we are in a similar part of the cycle, we can expect some kind of a structure and continuation in the dollar, which would mean we would get continuation in all asset classes which are pegged against the dollar. So it's very significant. But for now, quickly look at momentum. Starting to, it's not exactly a divergence yet, but there could be potential for it to stall a little bit before we get that continuation. So watch out for that, and you can, if it does stall, you can get some lower time frame structures in commodities. So for commodities, let's have a look at uranium first. You can see we've just broken out of the all-time VWAP. All-time VWAP is 19.9. Okay, so look at the daily chart. 19.9 is right here. We flipped this into support couple of times, failed. This time we broke up. We've broken out of a nice bullish looking structure, rising channel, break up, and we're just making that impulse. So if you can manage your risk from this low right here, 21, you can still carry on. In terms of levels to the upside, here we have on the monthly 30 and on the quarterly 34. So this is the zone we should be looking at for the next reaction. But again, strong uptrend, getting repriced against the dollar, looking for continuation. Now here's lumber. It's been added on FTX, and just because it has, what I would suggest to you is just don't touch this, guys. Just look at this. It's doubled in a week for a commodity. That's absolutely insane. And you can see lumber, that once it does get that kind of a move, there is still potential to get that pullback. So if you really want to get in, watch for pullbacks like this. I would say somewhere close to this 1250 zone. If it's too bullish, then 1400 zone. But look for pullbacks into this zone. If it starts to get deeper, then I would look for these tops. Great places to manage risk. But up here, just please do not touch this. Copper is at all-time highs. We've been watching this all the way since we were in this channel, managing risk from the mid channel right here. It's just been on an absolute tear since then, flipping levels very cleanly and moving very nicely, but again in a very impulsive phase. So you would need to wait for support, because now it's in price discovery. You need to wait for some kind of structure to build your risk. There's absolutely no way to ape into this right now. Platinum got a decent resistance, but you can see probably in a much better place to be managing risk. If you can break up from here, find support at the same level, you can look for potential upside. Silver also moved up from its range anchored VWAPs where it found support. above this yearly level. I would say if you do end up getting a pullback either towards this yearly level or the top of this channel, both of these would end up becoming some decent places to manage risk. Oil is still within a high time frame resistance. I would say once this flips into support, the next significant level, guys, right here, if you can break past 74, 75, start finding support, this could run to 100. Essentially this is a very big structure that oil is also breaking out of. So we're just at the edge of breaking out of it, and if we are breaking out of this, you can just expect everything to really get repriced against the dollar, guys, and start to move pretty hard. Palladium, again, price discovery, need some kind of structure to start to end up managing risk. This 2600 level, you can get another test of this, that would be quite significant and pretty good. So across the board, gold, again, this is the place you're managing risk, guys. Now you are in a confirmed uptrend, so you'll have to wait for pullbacks. If you can get something close to the 1800, which is the anchored VWAP from the lows, this would end up being a nice place. The zone between the 1800 and the quarterly level for gold as well.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!